Hi everyone, welcome to Equitymaster Stock Market Wrap Up. I am Rini Mehta and in today's podcast, I'll be taking you through what moved the markets over the week. Later in the podcast, we will be joined by the CEO of Equitymaster, Rahul Goel, who will reveal a few of Equitymaster's secrets and talk about its popular book launch. So stay tuned. Now let's look at the key stories that I will cover today. US and China escalate trade war with a new round of tariffs. Credit Access Grameen IPO's weak stock market debut, stock buyback flurry and the questions it raises, and top sectors and companies that swayed the markets this week. First, a look at broader cues. After clinching fresh milestones during the week, shares had a sort of anticlimactic ending as benchmarks managed to end the week on a subdued note. Indian share markets erased its week's opening gains amid weakness in the rupee, US-China trade war concerns, and mixed global cues. The US dollar took a hit this week after Donald Trump said he was not thrilled with the Federal Reserve for raising interest rates. Meanwhile, Indian rupee suffered this week, once again breaching the 70 mark against the US dollar due to renewed worries about a hike in the US interest rates. Losses were also seen on the back of escalating US-China trade war. Now, what's exactly happening between US and China? I'll talk about it in detail a bit later. Now, speaking of the stock markets, the pattern of financial returns in the last month have been affected by unusual circumstances. The rupee has fallen against the dollar, gold and silver have both lost the ground. However, the Nifty and Sensex are up and there's been positive returns across every sector. And while Sensex is reaching new highs, the mid-cap index and the small-cap index have corrected sharply this year. So this makes all of us think, what cycle of markets are we in? Are we at the peak or is the party set to continue? The Sensex recently touched its all-time high of 38,400. As Girish Shetty, research analyst at Equitymaster says, and I quote, "Recent scenarios developing in global markets call for caution. Rising interest rates and crude oil prices, along with trade wars, can be a roadblock for emerging markets like India. With markets at peak levels, I believe a correction cannot be ruled out. The time to shortlist good quality stocks might just be around the corner." Unquote. Now coming to the US-China trade war, two of world's largest economies escalated trade tussle on Thursday after the US imposed 25% tariffs on another $16 billion worth of Chinese goods. In retaliation, China imposed 25% tariffs on an equal amount of American goods. This happened as officials from the two countries met in Washington to find a way out to ease the trade tensions. Both China and the US have now imposed tariffs on $50 billion of each other's goods in the clash, which the Trump administration launched in an effort to punish China for what it says are unfair trade practices. The first round of tariffs went into effect in July and more are in pipeline. With this, businesses in China are also feeling the effects of the trade war, which has weighed on countries' financial markets. Investors are becoming increasingly concerned about how a slowing Chinese economy will weather a protracted dispute with the United States. Such fears have helped push China's main stock index into a bear market and drive the country's currency, the yuan, sharply lower against the US dollar. Now moving on to the IPO space, shares of Credit Access Grameen made a weak debut by listing at Rs 385 on the BSE. It was 9% below its issue price of Rs 422 per share. The company's 11.3 billion rupees IPO was subscribed 1.4 times last week. Now, with a lot of IPO set to hit the markets, we believe a merit-based selection, primarily including valuation, business and management quality, is the logical way to go about investing in IPOs. If it means going against the herd, so be it. Now, speaking of the stock-specific activities, L&T was in focus this week after its board approved a share buyback of 90 billion rupees at a premium of more than 13% from Tuesday's closing price. L&T's shares also hit a record high of Rs 1,346 yesterday. At its board meeting on Thursday, L&T said it will buy back 60 million shares via a tender at Rs 1,500 per equity share. With this, L&T has joined companies such as TCS and HCL Technologies, which announced buybacks worth rupees 160 billion and rupees 40 billion respectively in the last few months. Speaking of buybacks, the number of buyback offers in 2017-18 were at an all-time high. Never in the last 2 decades had Indian markets seen 59 companies announcing buyback plans. But what is truly surprising is that, unlike in the past, the buyback this time seems skewed in the favor of short-term investors rather than the long-term ones. As per Rahul Shah, co-head of research, investors should not assume buybacks are always good. As he says, and I quote, "The reason behind the buyback must be investigated. At the end of the day, an increase in earnings should be more a function of the inherent robustness of the business, as that's what will help it continue to grow at a healthy pace." Unquote. Now moving on, shares of pharma companies extended their upward journey this week, with the Nifty Pharma Index hitting its 52-week high on the NSE. Sun Pharma, Divi's Lab and Cipla also hit their respective 52-week highs this week. Pharma has been driven by a combination of decent results and hopes that the export-oriented sector will benefit from a weaker rupee. Since the sector had been relatively beaten down for quite a while, it was also seen as something of a turnaround opportunity. Shares of FMCG companies were also on a roll, with Nestle India, Britannia Industries, Godrej Consumer Products and Dabur India rallying up to 7%. These stocks also hit their respective new highs on the BSE on Thursday in an otherwise subdued market. With so much happening in the markets these days, it is difficult for the ARM investors to figure out changing trends or to identify great managements and pick potential multi-baggers at the right time. It is always helpful to have a handy guide guiding you towards the right direction. That brings me to my announcement. We here at Equitymaster have just released our extremely popular book, Equitymaster's Secrets, a book revealing the biggest lessons from our entire 20-year journey. And today we have with us Rahul Goel, the CEO of Equitymaster, to tell us about this launch. Hi Rahul, it's a pleasure having you on board. So as I understand, you have republished the Equitymaster's Secrets. And since this launch, over hundreds of copies have already been claimed. So can you tell our listeners why you decided to publish Equitymaster's Secrets?
Sure, Rini. Thank you for having me at this your market wrap-up podcast. To take you back in history, in 2016, we published the first edition of the Equitymaster Secrets book. We were celebrating 20 years of Equitymaster, and we thought it fit that some of our main learnings over the years of how to pick stocks that could make money for our investors, we should put in a book and give it out to our most valued and dear readers, so they can sort of refer to it, keep it on their bookshelves, and just a great thing to have. The first edition of the book, which I mentioned, which was released around April 2016, was claimed by over 20,000 people. And I'm going to say that again, it's 20,000 people claimed the first edition. So it was about time for us to think about doing the next version of the book. So we've just released that new version, which you're referring to. It has additional content, largely a detailed piece by Tanushree, who's the co-head of research at Equitymaster and editor of Stock Select, our blue chip stock recommendation service. The book's already out, and like you mentioned, it's off to a flying start. We've had hundreds and hundreds of people claim the book already, and we still got a few in stock, so we are hoping that they'll run out of stock soon.
So are you really revealing all of Equitymaster's secrets? Aren't you worried that subscribers wouldn't need your services anymore?
No, I think it's a great question. So the business, for lack of a better word, that we are in is to educate and empower people. We have millions of people who come to our website every month, and only a small fraction choose to subscribe to our services, which is fair and fine. Not everyone has a need for a ready-made solution. So the book is for those people who want to try our service. If you don't want to continue with it, that's fine. We are still moving ahead in the mission and vision that we have for the business, which is to educate and empower readers. So one way or the other, we are moving forward, and we are getting one step at a time closer to our end goal, which is to educate and empower investors, like I said. So yeah, we are fine either ways.
Well, then I can't think of a better guide than this great book, of which I wholeheartedly recommend to you, dear listeners. We have very few copies of the book left, and it goes all the way to reveal the complete stock picking strategies behind all its multi-bagger recommendations. You can just log on to equitymastersecrets.com to receive your virtually free copy. Lastly, Rahul, would you like to tell our listeners about your plans to publish more books in the future?
So, unfortunately, publishing books is not a very economical exercise. But having said that, we do publish a lot of reports and guides which are available to our members. Even the Equity Master Secrets book that you refer to is available to our readers in various formats, including a PDF version if they want to claim that. So much as we would like to do more of this, I don't think we'll do a whole lot. But yeah, it'd be fair to say that there will be more books along the way. You're aware that we've published books for Vivek Kaul, the India's Big Government. We also published in India Bill Bonner's book, Homageddon. And I think in the future there'll be more books. But I don't think so there'll be a whole lot of published hardbound books like the Equity Master Secrets. So if I may, I would strongly encourage all listeners to your podcast to visit equitymastersecrets.com and take a look at the book and claim it. And the book, which is it's priced at about 1,450 rupees, is actually available free, and all you need to do is pay the postage and handling charges of almost nothing, which is 199 rupees. So I hope your listeners will make the most of this opportunity.
Well, that's great. Thank you, Rahul. We look forward to more book launches. And now with this, it's time to sign off. But before that, we would like to know whether you like our idea of podcast. Is there anything specific that you would want us to cover? We would love your feedback. Just visit equitymaster.com and drop us a line. We look forward to hearing from you. Thank you and happy investing.